Good morning, everyone. It looks like the stock market's going to open lower today as investors are digesting Trump's latest comments on a Fox interview on Sunday, saying that it looks like we're going to have some short-term pain in order to get interest rates down for Americans for their mortgages and car loans, etc. And he said that he's not really focused on the stock market right now, and we shouldn't really be focusing on quarter-to-quarter growth because China has a long-term view of 100 years out. He thinks that the U.S. should have a long-term view. And this is causing some uncertainty in the markets as to, is Trump trying to cause a recession deliberately in order to lower growth and lower interest rates? And honestly, I'm starting to think that. We had Elon Musk say that we're going to have a temporary hardship a few months ago. Trump saying in the State of the Union speech, a little disturbance. And Scott Bessent saying on an interview a detox period. All those things, looks like we're going to have a hard reset on the economy, and that's creating a lot of uncertainty. We're seeing the ping pong back and forth of whether the tariffs are going to happen, whether they're going to be extended, whether or not there's going to be exceptions to be made. And although some of this tariff talk might be good in the long run in terms of bringing manufacturing onshore, and we are already seeing some of that. We're seeing a lot of investments onshore, especially for AI data centers, as a way to get around the tariffs, and as also not a way of extra government spending, which is in a way why Trump was saying that we might not need some of the excess funds in the CHIPS Act anymore, because we're getting the desired effect by these tariff threats of bringing AI manufacturing onshore. So that's getting done, but at the same time, there's a lot of uncertainty otherwise. It's hard for business leaders and CEOs to plan for their businesses if they don't know if they have this degree of policy uncertainty in general and on the tariff front. On top of that, we have reports from the Trump administration that they're thinking about changing the calculation of the GDP report to remove government spending. And honestly, I think that's a bad idea, and that creates a lot of uncertainty. In a way, it's might be a tactic to hide all the government and DOGE job cuts that are going on. But at the same time, we also have White House economic advisor, council leader, Kevin Hassett pretty much admitting that, Q1 GDP could be negative. So perhaps by this talk, it's a way to almost get ahead of a possible negative Q1 GDP report just by even bringing this up. I think it's a bad idea overall if that would happen. It would change the calculation of GDP that we've known for decades. And look, you can make an argument, however, that some government spending is inefficient. And although that could be true, it's still a multiplier, though, throughout the economy. And it's still part of economic growth. And I think that would be overall a bad idea if we cut government spending out of the GDP equation. But I think that the administration's thinking about that in order to hide some of the DOGE government job cuts and government spending and austerity measures to try to hide that, in my opinion, to get ahead of a negative Q1 GDP report. That's my theory. I don't think it'll ultimately happen, but I do think it'll be a bad idea. But yes, I do agree that some government spending is inefficient, and it's better putting some resources more into the private sector. I certainly agree with that for sure. And we are seeing that process play out. It'll be a long-term process, but in the meantime, this talk about removing government spending from GDP could cause some uncertainty among business leaders and CEOs in the economy. So that's something to keep in mind as well. And then a lot of people are asking, why is crypto selling off right now? We have the Bitcoin Strategic Reserve and digital asset stockpile. Shouldn't Bitcoin be doing really well? That's a great fundamental reason of more, worldwide acceptance of Bitcoin. Well, in my opinion, with these growth scares right now, you're starting to have almost like a liquidity crisis where people just want to, sell money on all assets because they're afraid of growth going down. And unfortunately, even Bitcoin, is affected by that too. All assets are in a growth scare or liquidity crisis. If there's that much uncertainty going around, especially in the short term, Bitcoin isn't immune from that. Obviously, eventually when the Fed cuts rates and there's more money pumped into the economy, risk on assets like Bitcoin will do well. But in the meantime, Bitcoin is still affected as well in a growth scare situation of investors wanting a flight to quality And that's almost what the Trump and Bessent administration kind of wants, is that they want investors to sell their risky assets like Bitcoin stocks and perhaps even a little bit of gold and put that into treasury bonds. And in turn, the yields and interest rates will go down, helping Americans obviously with their mortgages, car loans, and it'll be good to refinance our $9 trillion of debt that's coming due this year at lower rates. So that's my theory.